The brand market is dominated by the big groups, so Louis Vuitton, Kering and Richemont, certainly over the last year have dominated the market in terms of new openings, new brands coming through. You look at Louis Vuitton and their position in London, somewhere like Bond Street. Over the next 6 months they'll be opening 4 or 5 brands from within the group on the street, including Givenchy, Marc Jacobs, Loewe and Celine, and that just demonstrates how powerful they are in any market. Richemont have had the same sort of growth pattern over the last year. Their focus at the moment, other than their watch and jewellery business, is their apparel. So Alaïa will be opening their first store in Bond Street early part of next year, and Chloe opened a few months ago. Chloe is a really important brand for Richemont Group because they want to very much get into, in a much bigger way, the apparel market and compete more with Gucci and Louis Vuitton. So we see Chloe probably opening 50 to 100 stores globally over the next 3 years to really give them some kind of footprint. And Kering have probably been the fastest growing group over the last 6 months. The hottest brands, other than Gucci and Yves Saint Laurent themselves, are Balenciaga and Pomellato is a smaller jewellery brand who are expanding quite heavily in Europe. So the engine room in terms of the impact on the different markets is the big groups. And then you have some of the larger independent private companies like Moncler, Bruno Cucinelli, Philippe Plein, who globally are making quite a big impact, opening big flagship stores, showing their importance in that luxury market, which really gives confidence to an investor in these ultra prime locations, because if they see the big groups and the big brands expanding, then that gives them comfort that the spend is there, and more importantly that affordability on rents is sustainable.